Hi, I'm Brendan Egan for Mining Journal and Resource Stocks, and I'm here today with James Champion de Crespigny, Managing Director and CEO of Catalyst Metals, ASX code CYL. And for reasons that will become obvious, we also have with us Superior Gold CEO Chris Jordan, explaining the value proposition this consolidation play will bring his Superior Gold shareholders. Now, James, before we talk about the regional WA consolidation, can you please outline Catalyst's non-WA assets, their history and where they figure going forward in the company's plans?
Yes, thank you for having us, Brendan. Catalyst owns two assets, a gold project north of Bendigo and an operating gold mine in Tasmania. Last week, we released an announcement of 6 metres, an intercept of 6 metres at 197 grams. That is characteristic of Bendigo style mineralisation that we have immediately north of the township of Bendigo, which of course hosted the historic Bendigo goldfields. The project also sits adjacent to the large, high-grade and well-known Fosterville gold mine that still operates there near Bendigo. Down in Tasmania, we have the Henty gold mine that currently produces about 30,000 ounces of gold a year. Catalyst acquired that 2 years ago, and we did it because we believe that exploration should be funded from cash flow. And so through Henty, we are able, particularly in this gold price environment, able to generate cash flow that can cover corporate overheads and invest that money back into exploration at Bendigo.
Excellent. Well, the Plutonic gold belt has been a well-known address for mining watchers since the 90s. How long have you been targeting the Plutonic-Marymia belt, and briefly, how long has it taken to pull this deal together? Because there's a few working pieces.
In January this year, we acquired an ASX-listed company called Vango Mining. And then in February this year, we, with Chris and our collective boards, bought those two companies together, being Catalyst and TSX-listed Superior Gold. The premise of this transaction is consolidating under one Australian gold company the entire Plutonic gold belt, which has never previously been owned by an Australian gold company. And therein, we have a single piece of infrastructure and a number of high-grade deposits that sat on the Catalyst ground to the north. And by bringing the two together, what we were able, Chris and I and our collective boards, to unite was high-grade ore feed through central infrastructure and the consolidation of a single gold belt under that one Australian roof.
So what's in the deal? What do the acquisitions actually come with?
So the Plutonic gold mine has been well known in Australia for many years. It's got today a reported resource of 6 million ounces of gold that sits beneath a 3 million tonne per annum processing plant. Currently, that processing plant doesn't run at full capacity. It also is in need of some higher grade ore feed. To the north, under the Catalyst ground, is the high-grade deposits such as Trident, K2 and others, which have 500,000 ounces at 8 grams per tonne, but includes another 1 million ounces as part of that overall resource. So by bringing these two assets together, we have a 3 million tonne processing plant, we have 7 million ounces of resources, and we have a high-grade component of 500,000 ounces at 8 grams. And so fundamental to both boards was bringing these assets together and realising the synergies of a central processing facility with high-grade ore feed for the future.
Okay, Chris, so what was the logic in this deal that spoke to you on behalf of the Superior Board and your shareholders?
Yes, thank you. So first and foremost, the ultimate responsibility of the board is to steer the company in a way that's in the best interest of all our shareholders. Now, our board unanimously, which includes me, firmly believe that this transaction is in the best interest of our shareholders for a few reasons. And maybe I'd like to elaborate a little bit on that. Firstly, it provides a premium for our shareholders of 59% at closing prices of June the 2nd, 2023. Secondly, a combined strength of Superior and Catalyst, providing ownership in a well-funded, diversified Australian stock exchange listed producer with proven operating and exploration capabilities, significantly improving the scale and access to capital compared to a single asset company, which Superior Gold is currently. Now, from this, the ability also to unlock future growth by ongoing exposure to value-creating growth projects at Plutonic, plus exploration upside across the Plutonic-Marymia gold belt. Supported by a better capitalized company, providing access to a stronger balance sheet and more diversified portfolio of assets as opposed to a single asset company. And in addition, improved investor recognition and re-rating potential through improved trading liquidity and enhanced public profile in Australia provides the opportunity for re-rating to a higher level. Now, lastly, the litigation between Superior's wholly owned subsidiary Billabong Gold and a subsidiary of Vango Limited, Vango, now owned by Catalyst, as James explained, comes to an end and provides access to the integrated Plutonic-Marymia belt without any delay that may arise from further litigation.
Excellent. So now you can look forward to your budgets being spent in the ground rather than the courtrooms
Exactly.
and those sort of things. Fair enough. So James, you're planning on consolidating equity positions here and building a cash flow company. So with your recent 20 mil capital raise, what sort of revenue numbers can we look forward to next year?
Yes, thank you. I think currently Catalyst is a 30,000 ounce gold producer. With this consolidation, on day one, we would be a 100,000 ounce gold producer. Then when Chris and I get together and look at our plans for this belt, we see that increasing significantly over the next 12 to 24 months. And we believe that the gold production from this belt will place Catalyst firmly amongst the peers in that mid-cap Australian gold sector. And so we can see gold production well into those areas amongst those peers that will be classed as mid-cap Australian gold producers. So in terms of revenue, at gold prices of $3,000 Australian and getting towards those really quite significant gold production numbers, you can join the dots as to where those revenue numbers will place Catalyst. And we think coming out of 2 and 3 assets across Australia, as well as a wonderful exploration belt there at Plutonic, it provides much extension of life and revenue, obviously, to follow.
Right. Okay, so just quickly, once the dust has settled on this, what's the company going to be looking like in terms of that market cap, shares on issue, cash in hand, and perhaps just quickly on any debt or hedging positions?
Yes, certainly. So when the transaction was consummated back in February, we were looking at a pro forma market capitalisation of about 200 million and an enterprise value below that. We then today have 174 million shares on issue, and it will be 220 million shares on issue after the transaction is consummated. We have a little bit of debt between the two companies, but a positive net cash position, if that makes sense. Really, that positive net cash position is being looked at to increase deposits like Trident, which is 400,000 ounces at 8 grams. That already from our studies shows costs being very low and feeding that high grade ore through the existing infrastructure of a haul road and processing plant. And that will be first cab off the ranks to really steady operations at Plutonic and provide for a much lower cost base across the combined company.
Excellent. Okay, gentlemen. Well, thank you, James Champion de Crespigny of Catalyst Metals and Chris Jordan from Superior Gold, speaking on their plan to merge their separate interests in the Plutonic-Marymia gold belt into one under the Catalyst Metals banner. This is Brendan Egan for Mining Journal and Resource Stocks.